Access to this webinar is for educational and informational purposes only. Consult a licensed broker, registered investment advisor before placing any trades or securities in order to discuss contract. I'm monitoring virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded in either PhilStockWorld.com, TSW, nor its affiliates, nor any of their respective offices, personnel, representatives, agents, or independent contractors. Are as best advice on financial advisors, registered investment advisors, or registered broker dealers. Nothing in this webinar rights to promotional material constitutes promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services and meant to teach you the risks and potential rewards of trading options. And we don't have risk those with trading on implying guaranteeing any profit. As always, do not trade money. You cannot afford to lose. Past performance does not equal future results. Results within the webinar are not typical and are only valid on that specific or identified date. Your results may vary by access to the webinar. You agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above by access in the webinar. You agree to be placed on a mailing list and receive our newsletter. As sure, we take your privacy very seriously, and we will not distribute your information to anyone. Done. All right, let's see. All right, so where are we? Where are the markets? We are once again in, oh, no, I'm losing money. My lovely profits. Oil is popping up. I'm up 4,000, close to 4,000. I was up 4,000 for the day, but now I just lost 300 bucks. Freaking thing. All right, still gonna add one here. Oh, no, you can't call me now. Who's this? Oh, my brother. Hang on a second. Yes. Oh, yeah, love one. Recipes, lettuce, tomato, mayo, extra baritone. No, I got a whole one. I'll eat more tomorrow. Okay, thanks. Oh, glad I picked that up. I'll get a sandwich. All right. Let's see. All right, what was I going to do? Oh, yes, I was going to add and take that off. So we're at 75. There we go. That was easy to fill. I got a good cushion because I'm way up, and I don't want to blow it. But I don't really see. We'll take a look. We'll see if there's any particularly good reason. Don't forget, it's 1 o'clock, so the EIA just came out, the longer report. So we'll take a look at that right away and find out if this is a bad move or not. I've got some short S&Ps at 29.40 or close to 29.40. I only have 2. I think I'd add a couple more up here, but then if it goes above 45, I think I'll get out. And that's it for the moment. So let's take a look at the EIA report and see what's going on. The petroleum spelling is important. Oh, damn it. Let's try that again. Petroleum status report. Thank you. Question bar is right in the way over there. I think no matter where I put it, it ends up being in the way. All right. So 1 o'clock, the short one that everybody read was at 10:30. The one nobody actually reads is at 1 o'clock. You got to make sure it's the right one you're looking at. This is the week ending September 21st. This is not the updated report. This would have been the week ending September 28th, I imagine. To PDF from this morning, week ending September 28th. So the 1 o'clock report hasn't actually come up yet. So we have to wait until it refreshes or does whatever it's supposed to do. So we're gonna have to wait on that because that's not right. So we won't talk about that right now. Let's just take a look at what everything is doing. Not those charts, these charts. All right. So everything is just up and up and up, basically. Dow's way up, S&P's way up, NASDAQ is doing okay. Russell is coming back. Yesterday we talked about the bounce on the Russell, which should be, where was that? There you go. So we were talking about the Russell falling, and we talked about the bounces here. So we were looking for a weak retrace. So 1670 was the line. That's a weak retrace. And from that, you get bounces, and we were looking for 1678 and 1686. Those are the two lines for bounces. So we're not anywhere yet. We're at 1677. So 1678 is the weak bounce line off of this drop. So that's what we were looking for yesterday. It didn't happen yesterday. It actually got weak. Well, actually, I mean, look, that's where it came to, and then it failed. So now it's coming back here. And if it fails again, it's a very bad sign. That means it's consolidating for a move lower. So failing at 1678, which was yesterday's weak bounce line, is not good, especially when it's taken a whole day just to get to that. But, you know, Dow very strong, S&P very strong. You can see the volumes trailing off here as it peaks out. So we'll see what happens. It's a very iffy chart, though. It's not easy to call. The VIX is very low, though, so nobody's panicking about anything. Europe finished up. You know, Europe was weird because the DAX finished down 0.5 point, but it recovered from a big drop. And shoot, sorry. So where was I? All right, so and then we got the energy stocks still tracing along near the highs, basically. And again, we were going to look at the weekly when it comes up. So hopefully it's up now. Damn it. Very annoying. So the dollar, by the way, we've got to look at the dollar. The dollar is actually getting stronger. So that makes these moves pretty impressive. If everything's moving up against a strong dollar, that's a pretty powerful move. The bonds are in the toilet because of the Fed, you know, they're just falling off a table. We got a huge move in coffee. If you guys played that last week, congratulations, because that was our call last week. Was down here, we were banging the table to play coffee long. It really took off. 10% move in coffee is massive amounts of money. Sugar also, another one we liked last week. That is a sick move in sugar. It doesn't pay much per thing. It's only like $100 and something per penny. But this is only $100 per penny. But this is now 100 pennies. So you're talking about a $10,000 move in the sugar contracts. So that's a fantastic one too. You know, we never played sugar, but it was just so low. I was like, okay, that's stupid. Here, look. We were talking about it, and you know, when something is making 5-year lows, you got to give it a shot. Unless you know something crazy is going on in the world, why would sugar suddenly be 5 years low? Same thing goes with coffee. It's like, why would you not play something? The reward is so much more than the risk. Same logic with coffee, okay? We hit these lows. It's like, why not play it? It's not likely to go much lower. It really is not. So that's what we like to get involved in these things. All right, David has a question on TZA. Let me watch my oil spread first, just in case. Oh shit, 76? You gotta be kidding me. What the frick happened? I just lost half my gains for the day. Wow. Now, I'm not gonna do anything until I find out what's going on with the oil. So what else do I have short? I have a couple of ES shorts. And I'm waiting to get a little higher before I add to the, this is crazy. Twitter, what happened in oil? I swear there's got to be something in this report, but Still doesn't say September 28th. Maybe if you refresh it. Ah! Now, somebody said that we didn't export as much as we did last week. No, that's not true though. We did. Net imports are the same. Then we exported the same amount of petroleum as we've been exporting. In fact, we exported a little bit more. But total export, the net imports were down a tiny bit. That accounts for 2 million barrels of the shortage that we had. But on the whole, no, just a huge build in oil, an 8 million barrel build in oil. Others was a 2 million barrel build in others also. So net was a net build. Forget which is which, but 08 to 87 is an 8 million barrel total build in stockpiles in the U.S. All right, and last year we were at 968. They make up all these bullshit numbers about saying how petroleum is down and whatever. And it is. Crude oil is down from 465 to 404, which seems significant, but overall we're down from 968 to 908. It's a very, very small fractional difference in the total supply of oil. It's not significant, and it's not. We have as much oil as we had last year, so there's no reason it should be so much more expensive. But it is. Last year was 51, now it's 73. And gasoline last year was 256, and now it's 286. But there's no reason for these things to be so much higher. It's all just about a big hype job. There's no, they're driving it with the fear of Iran. It's a forward fear. They're trying to say, like, in the future, Iran may cut off some oil, or we may cut off the oil from Iran, and that will cause a shortage. But it's an artificial shortage that would cause it. That doesn't count. That's not a shortage of oil. It's an artificial shortage. It doesn't affect the global supply. It doesn't affect the global demand. It doesn't affect anything long term. It's just a short term thing, though, that we've got so much surplus sitting in the ground that it really makes no difference whatsoever. And we don't import any oil from Iran anyway. It really doesn't affect us. The stupidest thing is the reaction that we have locally to this sort of thing. So, okay, so given that, I'm still inclined to short oil. The question is, why is oil flying up? Who said something? What happened? So we tweeted oil, and we'll see what happens. Putin says Trump should blame himself for oil prices. That's probably the thing that just drove it up right now. And obviously that's true. Wait, what's this? Oil changed, nope. Oil 73.63 high of day, not falling. Maybe USMCA was not as trade, blah, 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 limited time. Also, the funny thing is Canadian oil is getting like less than $40 a barrel, which should also be in our favor. But so far that's not happening. Reduced exports. Oh, here you go. See, this is you got to look to see what people are pushing. Don't forget, it's all it's just a lot of it's bullshit. But you want to see what the chatter is that might be moving oil one way or the other. I see bulls and bears are arguing on Twitter and whatever, but you want to see if there's headlines or anything that actually matters. The Putin thing matters. The other stuff is just what people are talking about. People, I don't understand what they're saying though, because I heard this earlier today. Reduced exports, but that's not true. It's only a small portion of what happened. Oil spill, maybe. Let's see if I find anything else out about that. Oh, that's a good picture. Don't know what it has to do with anything, but unfortunately, you search for oil, you get oil paintings. Okay, so this guy's got a chart, and he's saying that we're breaking up a wedge, apparently. Oh no, this is Camber Energy. That's not oil. See, if there's artificial intelligence, why can't it do it? Because Putin again, so that seems to be the real mover right now. All right, so given that it seems to be Putin, and I'm not sure that's the only thing, but since it seems to be Putin, I'm certainly willing to add a couple more shorts here. And I'm going to raise my average now at 75. So if I add another one, I should get to 7. Yeah, nope. I'll do it. I'll go 4. All right, so now my average is 75.88. So I think that's a pretty achievable goal. And if we get back to 75.88, I will happily get back to 2 contracts short. If we go over this red line, I'll stop out. So I'm not taking a huge risk because I'm only risking a 20-cent move against me, basically. You know, which is not cheap at 8, but at eight contracts, that's $160 per point. So it would be a $300-something loss. So I'm risking that by adding some contracts. But I raise my net price, and I'm hoping for any small pullback. Now, what my theory is at the moment, I don't know for sure, I haven't been able to do an exhaustive thing, but I only see the Putin thing as being the thing that spiked oil up. What he said is true. It indicates to a bullish trader that Putin's not going to do anything to help in this situation. He's actually enjoying the fact that oil prices are going up, but it doesn't make oil go higher. What he said doesn't affect anything. And it just takes away a hope that the bears had that Russia would increase their output if we're knocking Iran's output down. But that's not going to happen. And again, we talked about this last week. Iran will sell their oil to someone. We're sanctioning them, but our own allies are working against us to help Iran get around the sanctions. Our allies. Our allies aren't even our allies anymore. There was a poll the last couple of days that showed like that our own allies have like virtually zero trust in Donald Trump. You know, they polled like who likes Trump. I think the only people, there are only like 4 countries with a positive attitude about Donald Trump. One of them is Russia. I think Turkey and Russia were 2 of Trump's friends internationally. Other than that, out of 200 countries, there's only 4 that had a positive view of Donald Trump, and 2 of them are dictatorships. So I think North Korea was the one. So, you know, so Trump is right. He is developing a little romance with Kim Jong-un, but it's not really helping us on the international front with anybody else. So the Iran sanctions, you know, the bulls are using the story to make it seem like Iran's 2 million barrels a day of production is going to get cut off. But that's only if nobody on the planet will buy their oil. We're cutting it off, and we're trying to force everyone else to cut it off, but we don't have that kind of control anymore. And Trump doesn't have that kind of pull. And Trump can't get up there in the UN where they laugh at him and get everybody together and say, we're going to put the clamp down on Iran and sanction their oil. People don't even believe the sanctions are real. I mean, not the sanctions. I mean, the reason Israel's trying to say that Iran is building nuclear plants or has nuclear plants. And we're saying that too because we're backing up Israel. But, but in reality, I think Israel is one of the other countries that likes Trump. But there's no proof. There's no actual proof, and the rest of the countries are like, we don't see this. We don't see the evidence Netanyahu has is from like 10 years ago, and it was discredited at the time. He's like flashing this up, but it's good enough for Trump. So we're putting sanctions on, but all it's doing is just causing a destabilization, and also makes us look stupid to our allies, and it's causing us to lose political clout. You know, it used to be if we did something like this, everyone would take us seriously. We put sanctions on Iran before, and everybody went along because Obama would make a speech and explain why and so on and so forth. That's not what's happening now. This is just a lunatic screaming that he wants to put sanctions on Iran, and some people are doing it and some people aren't, but most people aren't. And actually, we're making Iran seem like we're picking on them. So they're getting sympathy, if anything, at this point, and Putin is lining up with them. You know, which again might be his plan all along to create the situation. All right, so see how this thing goes. Somebody tell me if anything goes on with the oil, because I don't want to lose money at this point. I should actually, man. I went to 8. I should be happy. You know, it's going to bounce off of 76. Oh, you know what we should look at here? We should look at Brent. I'm not too worried about these shorts. So BZ. So take a look at Brent and see what they're doing. And we'll look at RB. And the other thing you should be looking at is the dollar to see what the dollar is doing. So if you're playing oil, these are the things you should be looking at. You should be looking at gasoline prices. You should be looking at the dollar to make sure it's not getting weaker and supporting the price. And you want to look at what Brent's doing also. So Brent got rejected at 86. That's good. And so if Brent goes over the red line, I should get out of the oil. If gasoline basically got rejected at 2135, which is kind of where it was before when it got rejected. So that seems to be holding. But then the question is, what are they going to do when they get to this line? What are they going to do at 213? If they fail 213, that's going to be a good sign for oil, for my oil short. If Brent fails 85.50, that's going to be a good sign for my oil short. You want to see the other things cross significant lines. If the dollar keeps going up, that's good for my oil short too. So all these are the things you want to watch when you have a play like this. But you saw how easy it was. I mean, I lost $2,000 like really quickly there. But so before I panic and before I did anything about it, I checked my reasoning to see what made oil do this. I want to know why he did it. Just to get out because it spikes is silly. It's like I want to know, why am I getting out? What's happened? Why would I be? Do I really think now is the time to take a loss when it's at its absolute worst? And if I read something, go, I don't really see any particularly good reason for it to do this, then hopefully not. And hopefully I can recover. But the market's just blasting up. It's just crazy trading right now. It's hard to trade anything. So I was lucky to make this money this morning before everything went crazy again. That was from 75.50 though. I was shorting up here. So I was glad it didn't go up then because I would have started my day off much worse. If I started my day off with this nice gain, I was up about $4,000, and now I gave a little bit of it back, but I really just don't think this is a good reason for it to go up. All right, so David has a question. David says, TZA adjustment in the review. TZA, no reason to leave the short October 13th open because they were just 2 cents, and we may as well salvage our October 7s at 127 and pick up the April 7-11 bull call spreads at 105. Then he says, but you also posted TZA 80 October 7 calls at 120 can be rolled to 120 TZA. You see me did that twice? Well, look, if I'm redundant, then obviously don't do it twice. If I did something, sometimes I call something out during the week, and then when I get to do the portfolio review, I didn't make the adjustment in the portfolio yet, and then I obviously say basically the same thing again. So he's saying I also posted that the TZA October 7 calls could be rolled to the TZA January 7 calls at 135, and that was before we took the short April, before we took the other calls off, before we took the short calls off. So it's really effectively the same thing, except that if you did the first roll and you have the October 7 calls, then obviously cover them with the 11s. In fact, frankly, I think the TZA, April, sorry, can be rolled to the January. Okay, I'm sorry. So those are January. Let me take a look. So what he's saying is I previously said to do a roll, which I somehow missed in the portfolio. So I went to review it. I was still looking at the Octobers. So he said I previously said when the October, so let's see, October 7th. I mean, honestly, it's the same price because he's saying previously, you guys can't see it, I don't think. He's saying that I previously said the October 7 calls at 120, and in the review, I said the October 7 calls at 127. So they've been about the same price. It didn't make a difference if you did it sooner. And the idea was to roll to the January 7s in the first one. So I'm not sure when it was, but January 7s are now 180. So, God bless you. If you're in the January 7s, there's nothing wrong with that. I would still prefer to be in April and the April 7s are, you know, $2 basically. And you could still sell the 11s, and now you can sell them for 65 cents, I would say. So, you know, the roll, you'd actually put money in your pocket doing the roll because you're rolling into a $1.35 net position from a $1.80 from a $1.80. Yeah, $1.80 from a $1.80 call. So you'd be putting a little bit of money in your pocket if you do that roll. You want to roll and cover. That's all, and end up being basically in the same position. Look, at any given time, I mean, David, if I'd say something redundantly or you have something differently, just ask anytime. But it's, you know, I'll do that because I don't always get a chance to make the move in the portfolio that I call out. I can say, hey, that's a great idea, but you guys see me do this all the time live, and then somebody asks a question, I get on to something else, I do something else, and I forget all about the things I said was a good idea. So that's basically all this is. It's still the same concept. You know, and you'll find that I'm very consistent with, like, if I see something, I'm going to tell you the same thing each time I see it. Doesn't mean I remember what I said the first time, though. How are we doing? Oil, 76.01. Damn it. Come on, down, down, down. Here's TZA right there. So we have a nice, that's a, you have we had a big dip now. We had a nice run up to 9. Would have been good to cover there, frankly. And you know, you shouldn't need me to tell you this stuff. It's when you get a $1 move up, you know, you say, gee, this might be a good time to sell some covers. I just got a huge advantage. So looking at the dollar here, if the dollar fails this red line, that means it's getting weaker. And then I'd want to probably get on my cover on oil. But like I said, we think this is just because of Putin's comment. And if that's all it is, it'll hopefully start calming down. You know, Brent hasn't calmed down, but you also have to remember that Brent isn't open. They're sleeping. They're not sleeping. It's you know, 5 o'clock there, 4 o'clock there, whatever. No, what am I? I'm sorry. What am I talking about? 1:30 here. Add 5 hours, so it's like 6:30. It's night. It's dinner time for them. So they're not trading this contract. So the Brent contract is less of an indicator when it's not being traded. When it's actively traded, you can go buy it. But like now, it's probably been jacked up. Up here you go, 97, so you get a little bit of slip low. So now that we're below 76 is my stop. So let's now watch it closely. Oh, what happened? That's weird. Did it really pop back in the 10th of a second I went from one chart to the other? Yeah, I guess it did. I was gonna say, so now when below, then 76 becomes your stop. So because that means that it's held up on that line. So I guess I should lighten up, especially if I'm not going to be paying attention. I don't feel good about this. I really want to be in this trade, but I don't have to be in it that big. Whoops. And that's why, because then it does that. Come on, down a little bit low. Now see 39.24. I'm not out of 30.27. That's not good. 37.9. Very bad. Probably going to pop up. Up 40.10. Oh, wow. Not good. See, I fucked up. I should have gotten out. That's $600 right there. Just I hesitated. And I'm watching Brent to see if it crosses now. Now that I'm screwed, I'm going to watch it. Ah, you bastards. See? That's how fast if you don't, you got to make your moves. And that's why 76 stopping would have been a better to be as a rule. Nah, 91. But he's taking a little lower. Nope, now it's back up. 13. No, now I'm back to freaking 2000. You got to be kidding me. You bastards. Oh. Wow. It's got to be something besides just Putin then. Wow. I'm so pissed. Yeah, look, he just shot up. See, he just shot over the line. I guess I should be happy to be back at 2,000. Damn it. So pissed. Ugh. Now I'm watching 86 to see if 86 breaks one way or the other. I'm ticked off. That sucked. I just blew like 1,500 bucks. Yeah, that's it, done. Oh, whoops, hit the right spot. Now I got too short. Wow, it's just totally going up and up and up. Unbelievable. See, that's why when you get to your spot, especially when you add, you've got to hold those stops. You can't be greedy, which I was basically, I didn't want to get out of it because I still feel good about a short in oil. But you can't, just because if it gets away from you, it gets away from you, end of story. So I blew a very nice profit for the day. Now I've only got $1,200 profit there, which really is annoying. So now I'm done with oil for the moment because I'm very pissed off and I don't want to look at it again. So I'm going to go back to my Dow, YM, and ES, which I think I still have too short, right? I do have too short with a $100 loss at the moment. And then I'll go NQ over here. I'm going to get back in the oil shorts. I'm just going to do it when it's higher or when it stops going up, but I'm not going to try to call it right now. If it crosses back below this line, I'll get back in. If it goes higher, I have to think about it. So we'll see what happens. All right, so now we'll move on to the next topic. Let's see, I do not have any short oils, right? All right, good. So now I hope it just goes flying higher. It's like annoying as shit. But I certainly want to, I don't know what's happening right now. I don't know what could be causing all of you. So let's take a look at the Wall Street Journal, see if there are any. So we looked at this, there's nothing special going on here at all. They're saying that we exported less oil. We exported the same amount of oil. It's not even true. Net imports, we imported the same. We exported more. So that certainly helped our draw in oil, but not so much. There wasn't a lot of change. I don't know where they're getting this narrative from. It's bullshit. So what I say, we're going to check the Wall Street Journal. So WSJ.com. Nothing there. So nothing headline making. Seeking Alpha's news feed. Strong German services growth. We had good strong services growth too. More vacancy rate highs in 7 years. That doesn't seem to bother anybody. Every year it's higher than the last whatever amount of years you want to look back. It's been terrible. UK services PMI, Baker Hughes. Nothing. There's nothing. This is a nothing move. That makes me just want to short it again. So I'm going to take one. So I'm back in one. Now I filled the other one. So now I'm too short at 76.50. If it goes to 77.50, I'm happy to just add two more. But I don't want to miss it if it goes flying back down. I just don't see anything to support this. Of course, it pops right up from that. So the NYMEX closes in an hour, and if you guys see anything, let me know. But I don't see a damn thing that tells me why oil should be going up this much. I mean, that's just crazy. There's certainly nothing in the inventory report to support this. So, you know, even though I want to short it with some conviction for the long term at this price, I don't want to lose. I don't want to go crazy. You can see I'm already losing like $300-400 on 2 contracts. I want to wait until before I start building back to 8-10 contracts. I want to make sure it stopped going up, and I'm not going to jump in and add more now because I just compound my losses. So, you know, I'm ready to lose this whole $1,000 profit that I have for the day if it goes back up here. But then I'll add, and then I'll feel good about having 4 short, even though the thing is going insane. But I just don't see why. I really can't even see what possible reason this would have for doing this. Sri says, please, are there any good long-term plays on bonds? We used to play TLT. I don't even know where it is anymore, but I mean, they just, you know, they're just going to constantly grind down, you know, and there's no question about it. Rates go up, the bonds get, you know, how can you help it? The bonds have been so, the rates have been so low for so long that it's just there's nowhere for them to go with that. But you know, for the bonds to go, but down. I've been telling people for years. I'm like, if you loan the government money, if you loan the government $100,000 for 10 years at 3%, you're an idiot. There's no way you're going to get your value back. You're never going to keep up with inflation. You're never going to keep up with the changes in the bond prices. You know, where it's over now. And well, not 3%. You know, people lending money to the government at 2%, 1% for 10 years. I was like, what kind of moron are you? It's like, why don't you just put the money in the freaking mattress? At least that way you can use it when you have to. Anyway, so we used to play TLT. And I don't know where that is now. I haven't looked at it in ages and ages and ages. I think it's somehow in my head. So like I think 130. Whenever it was at 130, we used to short it. So I don't even know the last time it was there. But TLT. But 130 was our shorting line for a long, long time. And you see right here, well, now it's 120s. But see, it hasn't been there. Here's where it was at 130 last. It was way back in 16. When it was in the 130s, we used to short it at 130. We caught this wave down here, and that was that. You know, we were like, it was great. It never got back to 130. But of course, logically, it never was going to. You know, but it just didn't seem like it wasn't exciting to short anymore. When it was here, it was so predictable. It kept hitting 130 and coming back and hitting 130 and coming back, all based on, you know, what's the Fed going to do for the next, you know, it's a 7-year note TLT, I think. Or no, it's a 20-year note. Sorry, 20-year note. The 20-year note. So it's based on what is the Fed going to do between now and the next 20 years. And I'm like, anybody who thinks we're going to keep rates this low is a lunatic. And that goes for here too, though. It's still going to go down, but it's subject to going up and down and whatever. But to me, it's not a play. It's just a silly thing. It's just, it was dumb here. We didn't. That's why it wasn't a big deal for us. It was a poor play. I just kind of hate the bond market. It's so stupid. Yeah, why is crude even up? Huge draw. Well, it's not all about the draw, though. It's about what's going on with Iran and what people are saying about the sanctions and so on and so forth. Oh, wait, Trump's on CNN. Oh, you bastards. That's why. Ah, thanks, Corey. Okay. So Trump's on CNN saying stuff about Iran. That's what's happening. Thank you. Iran. Well, then we know that's nonsense because he's got no teeth in what he's saying. But let's see what he's saying. Iran, Trump. Not 4 hours ago, we withdrew from a treaty normalizing relations with Iran. Well, that's no shit. We were ordered to lift sanctions. That was the bearish news today for oil. What is Donald Trump saying? News. United Nations. 9 hours, 1 hour, 6 hours, 3 hours. Nothing about what he's doing right now. 9 hours. France blames Iran for shocking Paris. Iran blames Trump's plan to cripple the economy, blah, blah, blah. How come it doesn't show like the most recent? Why can't you do that? Settings. Tools. Oh, here you go. Sorted by date. Thank you. So we terminate a treaty with Iran after a court ruling. In response to a UN court order, the US lists sanctions. Trump said it was terminating a treaty. The move is symbolic. Yeah, that's what I'm saying. It doesn't mean anything. It highlights deteriorating relations between Washington, blah, 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 with 55 treaties. It's ridiculous. All right, well, that makes me good about my shorts. Okay, I'm happy. So now I feel better about having my shorts. So how many do I have? 4? 2. Oh, sorry. Ha, 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 ha. 1 more. And 1 more, because this is stupid. It's Trump being a blowhard, and it'll blow over, and then it'll come back down. So that's my long-term position. So I have 4 short at 76.63, and hopefully I won't have to go to 8. But if we go up a buck from there to 77.63, I don't know. I might wait, but we'll see. Basically, I'd like to hopefully stay around here though, 76.63, and see what happens. But I can very quickly get my money back if we just come back down to 75 or something like that. So we'll see what happens. All right. Is it a good time to roll out the NYCB $13 puts? All right. Well, these are better questions for chat, because it's really kind of silly to sit here and individually look at every single position we have just because you feel like adjusting stuff. I mean, it's just, yeah, I'll take a look, but I'm just saying it's not really relevant to anybody's interest at all, right? You know, you got a whole, imagine you're in a room with 100 people watching this thing, and you want to know what to do with your NYCB puts, which obviously I'll get to when I get to. So we have the January $13 puts, and NYCB is at 10.53, and we sold the puts for 150, and now they're 250. So is it a good time to do it? Anytime's a good time to do it, but I mean, it's just it's not really. We were kind of waiting for the 2021s to come out, NYCB, and we'll have to roll them eventually, but there's no emergency. They're coming off the floor. So if they come back between now and January, then why would we want to do it now? There's no, right now, if we think this is a bottom for NYCB, then everything up is going to be a benefit. And I don't remember what I said in the last review about them, but I'll take a look. We just did our portfolio review. So I just said it's another dividend play that's low in the channel. So we weren't looking to make an adjustment yet, and there's no hurry. It doesn't matter. And frankly, if we get assigned it, we don't care about that either. It's a very small play. We got 2,000 shares at $10 a share, so it's $20,000 position. We sold only 10 puts, so all they can do is assign us another 1,000 shares, and they're only $1. So our loss on this thing is only $1,000. We're only, I mean, why does it say 2,000? How does that? Oh no, it's negative. I'm sorry, I had 263. No, we're down. Here's what we're down. We're down 1125. So we're down $1,000. It's not important. What we're gonna, because look, the calls on the other hand are up $1,700. So net, we're up $800 on the puts and calls. That's what we care about. We sold more calls than we sold puts. So all we're going to do is roll the whole set to 2021 and sell more puts and more calls. But so far, since we've owned the stock has dropped $2,900. The puts and calls have made 800, so we're down 2,000 on the total position, less whatever dividends we collected on this thing. But it's a long-term hold. It's not drastic enough of a drop. We started at 12, and now they're at 1050. So it's not a drastic enough drop for us to double down and do anything special. So we're just going to roll the puts and calls and hold the position and see what happens. You know, if it had gone lower than 10, we probably would have doubled down on it. It's a 10. You know, when we're in for 12 anyway, if we double down, we're going to be at 11. What's the big deal? It wouldn't matter. So the best thing to do is just keep aggressively selling puts, and maybe the puts will get assigned to us one day. But that's the only thing we're going to do, so there's not going to be change. But let's look at MYCB. So keep this in your head. With MYCB, we sold 15 calls and 10 puts. And that's only for half the year. We sold them in May. So it's only 4 months later. We're up net of $600 basically. But this 338 is going to expire, so we'll be up $1,000 on that on these two contracts, because that's going to the premium here is going to expire worthless, and if it doesn't, then these will become worth more money. So we're definitely on track to be up $1,000, but we're down $2,900 here. So basically on the trade we're down $2,000, and now what's going to happen next? So NYCB. See, it worked out, because now we're going to be able to teach something. So now we go to 2021, assuming they're out. No, there they are. So the 2021s are out. We're at $10. If we sell the $10, look at this. If we sell the $10 calls for $1.40, and we sell the $12 puts for, this is weird, let's say $2.60. I don't know if that's true, but if we sell the $2, the 12, you know, our target is higher. I'm not going to not collect the money. I don't want to only collect, let's say this is 80 cents. I don't want to only collect 80 cents. I'd rather collect more money. So I'd rather get $1.40 for the $10 puts and $2.60 here. So that's $1.40 plus $2.60 is $4. So that will then reduce our basis by $4. All right, and let's, you know, less whatever. So let's get back to the position. So now we know we can sell $4 more of puts and calls. So we started out with a position that was 12 minus 260. So not, well, I'm sorry, not fully. So I'm sorry, that's not true, because we didn't fully cover. It's 24,000 minus 2,100 minus 1,500 divided by 2,000 shares. What? Let's try that again. 24,000 minus 1,500 minus 2,100 is 20,400 divided by 2,000 is 1020. So our net entry here is $10.20. They're at 1053. That's fine. Now, we could get assigned, but we're not going to get assigned, because we're going to roll these puts for 263, and we're going to roll them to these guys even, and we're going to sell another $1.40 of covers. So now we're going to minus 140, 1.4, and our net will then be 880, and we'll either be called away at 10, or will be assigned 2,000 more shares. I'm sorry, we only have 1,000, or we'd be assigned 1,000 more shares at 10. But let's say we double sell it. If we double sell it, then we're collecting another, if it's 260, we're minus 130. So I hope I'm not going too fast, but if we sell another 1,000 shares for 260, then it's minus 130. So if we sell 20 of these, because we only sold 10 originally of the puts, but if we sell 20 of these and we sell 20 of these, our net's going to be 750. We get called away at 10 with a 250 profit, 33%, which is fantastic for a dividend stock. Plus we're collecting the dividends. Or if we get assigned 2,000 more at 10, So plus 10 divided by 2, and we would be net 875 on 4,000 shares. So times 4, whoops. What? 875 times 40. So then we'll be in for $35,000, which is basically half an allocation block. So after all this chagrin, we'll be in 4,000 shares at 875, half an allocation block, and we can keep selling the puts and calls and keep collecting the dividend. I don't know what the dividend is, but I obviously liked it, and I certainly didn't intend to only own that many. Oh yeah, well that dividend 68 cents. I mean, that's fantastic. So you know, in short, this is why I'm in no way, shape, or form worried about this position. We'd love to own more. And that's what you do with these dividend stocks. So you just work them over years and you grind down your cost basis. So you know we have to include the fact that during this time we're also going to collect 2 years worth of dividends or 3 years worth of dividends at 68 cents. That's another $2. So our net then is not 750. Our net's really like 550. And if we hit called away at 10, we have a double after 3 years. That's fantastic. Not only that though, but if we get assigned, then we're net 15. Our net is basically 750 on the overall assignment. And that's what you do with these dividend stocks. We want to build a position. We want to have more and more stock because eventually we're going to own all this stock for free. We're going to work our basis down to 0. And that's when you forget about it. You just stick in your portfolio forever. It's something that'll lead to your grandchildren. We'll have 4,000, 8,000 shares of NYCB with a cost basis of 0 that are generating a 6.5% dividend. So if you have let's say we have 8,000 shares, that's $80,000 worth, and we're collecting $4,800, $5,000, $6,000 a year in dividends. That's just free stock, just sitting in your portfolio. And obviously it has value. If you ever end up cashing it, then great. Now, you can still sell calls against it down the road, but I'm talking about retirement. When you retire, you want to have $1 million or so worth of stock that is throwing off dividends to you with no hassle. You shouldn't have to do anything with it. You should just sit there and throw money at you. That's the beauty of the whole plan. But the plan is based on sitting around and wait. You know, it's a multi-year plan. It's not like every quarter, every month or two, you look at it and say, oh my God, I got to move this, I got to change that. You don't. The numbers work. The system works in your favor constantly. And the longer you wait, the better it works in your favor. Okay, so that was actually good. That worked out because we had a good teaching moment there. So, okay, oil is calming down a little bit, so we'll see what happens. I think it's, yeah, once you get done talking about it, it sends everybody panicking into it. But once you're done with that, things calm down. Everybody goes, well, what the hell are we buying? What's the big deal? All right. So speaking of things I do want to review, though, let's take a look. As I said today, last week in the webinar, we talked about these portfolio things. And again, this goes back to the same theory, really. Is this today? No. Oh. So last week, oh, you can see in the top trade alerts, okay, it was in the chat room. And we added, what time is this? Does it say? 11:21. So in the morning before the webinar, we went over this in last week's webinar when they were new. I said, here's a bunch of trades we could make to generate some money. I said, you don't have to sit around doing nothing in this kind of market. We can add stuff. So we had a bunch of things to the long-term portfolio because I wanted to make sure we weren't going to miss out if there was still a rally, that we weren't making enough income. So here's a way now in what is now almost $1 million portfolio, 900 whatever $1,000 it is. Where are we? 9, what? Wait. Yeah, 917. Crazy. So here we are on a $900,000 portfolio. That is insane. What was I saying? Yeah. So what I said is I don't want to be too bearish. So what we did is we took positions that made me comfortable, which are based on, okay, if the market goes up, these are good positions, but if the market stays flat, these are also good positions. And if it goes down a little, these are good positions. So it's very hard for us to lose. We're just establishing some longs, but leaning towards collecting a bunch of money in January by selling short-term January calls. For most of them, one was just a straight out bullish play on PSA, which isn't working out so far. Where were we? So the original trades were aiming, there was 101,875 in potential gains if all goes well. I said if all goes well, it won't all go well. That's obviously not realistic. And again, we're playing 10 casino games. We're creating 10 casino games. We're inviting 10 people to bet against us, and they're going to bet that these stocks will be higher than something. This guy's betting the THC is going to be higher than 28 in January. In fact, he's betting it's going to be higher than 31. It's 28 plus the 3 he pays. Anything less than 31, he doesn't get his money back. And we were betting it'll be 28 or less. That's why we picked 28 calls. So but our bet is hedged because we're also taking a long position, 27.37s, and we're also betting 23. We're saying, well, it ain't going to go below 23. We think it's not going to be 28, but we think it won't be below 23 either. So we're establishing a long-term position. Like I said, I want to have more positions at a long, but what we really care about for the moment is we want to say, I'll take a little bet here that says that by January we're going to make $3,000. So if all goes perfectly, we'll make $101,000 on these kind of plays. If all doesn't go perfectly, it's 10 casino games. Somebody could beat you. Somebody's going to get blackjack. Somebody's going to hit their number on a roulette wheel. That's going to happen. The more games you play, the more people are going to beat you. You know, the NYCB short putter is going to make $1 on you. He beat you $4,000. So what? In the grand scheme of things, as long as we win more than we lose, we're going to be in great shape. And so how does it work out? Well, here we are a week later, just a week, which is obviously a bullshit amount of time to give it. These are 3-month trades. But here we are a week later, and I wanted to go over it today because I want you guys to follow this day by day. I want you to understand what we're doing. We're now reviewing all the trades in the same order they were before. Best Buy went, I guess we can chart each one of these, but it's kind of not worth it. Best Buy had a big sell-off. Oh, that's not Best Buy, sorry, by Bed Bath & Beyond. I had the same problem last week, didn't I? Bed Bath & Beyond had a big sell-off. They dropped hard as a rock since we did this thing. No, I'm sorry, not since. I think we did it here, and now it's here. So it fell further. So Bed Bath & Beyond, we sold. No, I think that was actually the day that they dropped. Seems like more. It seems like on this chart that there's more than one. Oh, today would be. Yeah. Today's the 6th day, including last Wednesday. 1, 2, 3, 4, 5. There you go. So that goes back to last Wednesday. So I'm sorry. It's 6. So 6th day would be last Wednesday. There are 5 days since last Wednesday. So here was Wednesday. We bet it to go lower. We said it wasn't going to go to 20, and boy, it's not a 20. So basically, we're going to collect this whole $3,000, and so far we've got 2640 of it on that spread. We already had a spread in the long-term portfolio and also in the options opportunity portfolio, but that's not relevant to this. We sold these. This is what we wanted to do for the income. Now with Cake, we set up a spread. This didn't move much. It's up $125 though. And that's the thing. The default of these trades is to make you money, because if nothing happens, and I think Cake is like that, if nothing happens since last Wednesday, so here's last Wednesday, it went up, it went down, but it ends up nowhere. So if nothing happens, we make money. Why? Because all of the time premium starts wearing out of these things. And 3 months, maybe a week doesn't seem like much, but when you only have 3 months in the first place, it's only 12 weeks. So 10% of their time premium is getting destroyed on this trade. And that's where your huge house advantage is in doing the trades like this. Where are we here? So that's at 125. Chipotle keeps grinding lower. That one's doing huge. It's up 11,000 net dollars from where we started that trade. Not where we started. I mean, we had this trade on for ages. As of last week, this trade is up unbelievably in the long-term portfolio. But even from last week, where I said this is still a great trade. If you want to make $74,000 between now and January, this is a great trade. You have to have a lot of margin, of course, but it's a great trade. And we do have a lot of margin because we're sitting in the long-term portfolio. We have $400,000 cash. We have a $900,000 value in the portfolio, and the margin requirement is $900,000. So we should have $1.8 million in margin. This thing is messed up because it doesn't account for that. This is treating it like it's an IRA, which it's not, obviously. So we actually have about $1 million of margin sitting around in this portfolio. So we can easily afford to do trades like that. Where are we? Okay. So that's just ordinary margin. I'm not even talking about if you have portfolio margin where you'd have way more buying power, or like Interactive Brokers, which would give you, $4.5 million of buying power for that. We're not talking about that. Just ordinary, normal 2 times buying power. And you should have 1.8 million buying power for this portfolio. So what's the actual important number is how much margin is required, and you have to understand yourself how much margin you have. So where are we? So that one's up 11,000. GCI, I'm not going to go over every single one, but GCI is up 50. No big move there. These are still good for new trades. You want to make $12,500. This is still basically a $14.50 credit, and a 12.5 profit makes $13,950 you can make on the spread right now. Gilead's up 900. It's a $37,000 spread, good for a new trade. GoPro is down 900. It's a $20,000 spread, so great for a new trade. Macy's is up 235. It's a $15,000 spread, great for a new trade. But you see, it's a little bit here and a little, well, that's negative, a little bit here, a little bit here, a little bit here, and it adds up to $17,000 already in a week. Now, obviously, we're ahead of ourselves. You're not going to make $17,000 a week. That would be, I don't know, a lot of money. You guys think I don't do anything? I was doing 52. That's another $1 million. We can basically double our portfolio just doing stupid trades like this all year long. But I want to get across to you guys how easy it is to make money, just like sticking to the basics. We're not gambling here. We're not betting that some stupid pot stock does this or that. We're not betting some momentum stock. I don't care what these, I'm not looking to care what Netflix does or what Amazon does or whatever. I mean, Chipotle's a bit of a moving stock, but for me, Chipotle is obvious. We had this discussion in chat this morning because Chipotle, it's a, I don't know, where are we? Let me show you. I just did the math on this one. I think we had a discussion this morning. Oh, that was the one I had. Is this it? No. Okay. No. What happened? Must have been yesterday, sorry. You know, when we have overnight discussions, I get very confused as to where we have the discussions. Okay. That's not it. Going up. Okay. So I was saying, look, the bottom line is we sold the short puts, the short calls, because it's just not worth. Where did I say it? Yeah. So in the long-term portfolio, we had this position. These 460s, the short January 460s, they were left over from from an 18-month-old trade where the 460s were the short calls and the 320s or 360s were the longs. What happened is when Chipotle went way the frick up here to 500, we cashed in the 320s for 180 bucks. And we left these short calls, but I couldn't just leave the short calls because God forbid it goes up again for no particular reason. So we covered it with the 465.80 spread. That spread was $110,000 roughly. So this spread's $110,000, but we had cashed in 20 times 180. We cashed in $360,000 on the long calls. And so we left these, and I was like, and these were much higher at the time. And I was like, I'm not paying this guy to buy these back because the run was bullshit. So rather than buy these back, we cashed in our longs, left these up, and then put these up for protection. So we have another protection of $120 up from here. I didn't believe it was worth that. I thought it was going to pull back. It did pull back. So it works out perfectly because now we're making money off the short calls. So at the time, back on whenever we were talking about this trade, it was $74,600 was still left in that. Now it's $53,500 because it's been heading lower since last week. But I don't consider this a risky play because, as I was saying to somebody, when you're up here at $500, that's like 60, 70 times their what they earn. This company only makes, I want to say 200 million, but it just sounds so low. But yeah, look, they only made $200 million last year. They will be lucky to get back to here. Look, see these sales? They'll be lucky to get back to making $500 million, and they won't because what happened since then? Food costs have gone up, labor's gone up, and they're going to have a hard time driving higher prices back to the consumer. So I don't see that they're going to get back to this $500 million, and even if they make $500 million, even if, I'm still not really happy about paying $12 billion for $500 million in earnings. And that's what they are at 435. At 500, that's 20% higher than that. That's $14.5 billion for $500 million in earnings. That's like 30 times earnings for a freaking restaurant. That's ridiculous. And that's, don't forget, that's their fantasy earnings. That's if they get back to their best earnings ever. I don't even think they're going to get back to that. If they're earning $300 million on a $12 million valuation, 40 times earnings for a restaurant, and we had this logic about whether or not things, they must be an early one. We had this thing, and I was saying, look, I said, even Alice in Wonderland, you can't just say, oh, well, the market doesn't make sense, so maybe it'll go up to 1,000. Just because the market doesn't make sense. Like, even Alice in Wonderland was worried that getting her head chopped off might kill her. Even though you've seen weirder things than that running around in Wonderland, right? So not having a head doesn't seem like it might be a stopper in that place. She still walked places by putting one foot in front of the other and moving forward, even though things were upside down and crazy. You have to look at the things that do make sense and latch on to those, even in a crazy market. And otherwise, just don't play. Otherwise, just walk away and curl into a shell and wait until the whole thing blows over, which frankly, this is like 10 years into this, it hasn't blown over yet. So if you're going to play, you've got to look at some things that are rational. And I'm telling you, and especially, by the way, especially when you can look very easily at McDonald's, who originally owned Chipotle, they spun it out. McDonald's trades at 24 times earnings, not 40 times earnings. 24 is ridiculous, but fine, that's where they are now. Jack in the Box, is it J-A-K? No. J-A-C-K? Yeah. So Jack in the Box, 18 times earnings. Wendy's, 20 times earnings. Nobody pays 40 times earnings for a freaking restaurant. It's insane. So when I see something insane that I can bet against, I'm going to bet against it. If you're not going to take an opportunity like that, what are you doing? What are you trading? Your argument can't be, well, this is an irrational market, therefore, even though this is very good, a great looking, sensible trade, I'm not going to trade it because it's dangerous. Everything is dangerous. In this market, everything's dangerous. You guys just watch me lose $3,000 in minutes. It's very dangerous. How are we doing on that, by the way? Look, that's Brent. Oh, thank God. Okay. I'm like, okay, 86. I'm like, oh, 86. See, you don't even know in this market it could actually happen. It could do 86. All right, what have I got? I got two short ESs. They're not high enough to double down on. If I'm going to double down, I want to at least get my number to 40. So it has to be 1.25 above. So it has to be up here. Oh, look at it. It just does exactly what I said. So it has to be here. I have to do two more here to make the average worthwhile. Now these are back to 2,000, so I should really take that. I'm going to reduce. So now I'm going to watch it reduce. Because I was pissed off I lost my 2,000. So now I'm getting back to 2,000. I'm going to cut back to two short. I've accomplished that mission. I'm up 2,000 for the day. I was up 4,000. I'm not going to dwell. But at least now I'm back in the space I can deal with, and now we'll let it. Now I can walk away. So now if it goes all the way back up again, I'll just add more. I don't care. But I don't want to, I don't want to blow too much. So this one, I said let's add because I would like to have my average be 40. So 39,666 and 40. So now my average is 40. So when I can reduce, if I get a chance, I'll have two short at 40, which was what I originally wanted. And this I can now care less about. If it goes up, God bless them. I'll short this. I'll very happily add more at 77.50. So we'll just see what happens to these. But at the moment, that's okay. So David says a new trade for CMG 2024 60 calls. Okay, Dave, you're missing the point because the point was that the January calls lose their value very quickly. And also the point was that at the time we made the trade, the 460s were very attractive to sell because it was way too high. You're looking at this trade way after the money's been made and saying, oh, why don't I just enter it now? The reason is because now it's a very, very dangerous trade. Okay, when we shorted CMG, it was here. And I thought this blue line was going to be a stopper. Now it's here. I still think that blue line's a stopper, but that's unfortunately $50 against you. I have no idea whether it's going to go up here or down here. This is possibly the channel it's going to stay in, though I would be not at all surprised to see it come down here to 400 again. Because again, like I said, this is a ridiculous amount of money to pay for a restaurant. Well, obviously I've taken into account there's a lot of fans and people like Chipotle and blah, 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 but there's no story there. There's no special expansion. They're not doing anything different than any other fast food place. They're squeezing out burritos for a small profit. That's what they do, and they do it over and over and over again. The more burritos they sell, the more money they make, just like McDonald's. I'll tell you the problem with Chipotle, which is really the reason McDonald's spun them out in the first place, is they don't have that side business McDonald's does. McDonald's sells you the burger is basically the loss leader for McDonald's. You come for the burger, mostly. You come for the burger, you come for this, but the money is made on the fries, the money is made on the shake, the money is made on the Cokes, things like that. Chipotle is a little bit different. They pretty much sell a burrito and a drink. You know, I'm sorry, and they always make you pay $1 for the guacamole or something like that. That's not even that profitable, though, unfortunately, because it's a stupid thing to have it as an add-on sale. It's not that profitable. Avocados are very expensive. But they don't do a lot of sides. Why? Because a burrito is a big-ass thing. It's got a lot of stuff in it. Think about a hamburger compared to a burrito. A hamburger is not a meal. A burrito is a meal all wrapped up by itself. But people go to McDonald's and they come back with a bag of stuff. They come back with ice cream. They come back with fries and this and that, and little burgers that they wanted also. But that's not the star of the meal. And the star of the meal for McDonald's is the thing they don't make money on. And everything else that you put in your bag at McDonald's is huge profits for them. And Chipotle's not like that. And that's what the McDonald's people didn't like about the business. As much as it was growing and as good as it was going, they spun it out into a different company because they couldn't replicate the formula for profit that McDonald's has. Same reason McDonald's doesn't do pizza. You don't buy sides with pizza. McDonald's likes things that you buy sides with. That's their business model. Their business model is to make a freaking fortune on the sides, and that's why McDonald's are the most profitable fast food franchises. They generate incredible amounts of money. That's where the money is. The money's in selling you the stuff. And you know, and it's the same thing when you're in a restaurant. Restaurants don't make money on the food so much as they make money on the drinks and they make money on the dessert. So if they're not, you know, a good restaurant, if they can't sell you dessert, they got a problem. You know, if they can't get you to drink, and have dessert, it's tough for them to make money just selling you food. So anyway, so there's nothing exciting about Chipotle's model. They're not doing anything special. They tried a Chinese thing, didn't work. They tried a pizza thing that hasn't worked. They tried something else that didn't work. I don't know. They keep trying things that don't work. God bless them for trying. I mean, it's good. They should try different stuff because look what happened to McDonald's. They spun off Chipotle and made it billions of dollars. There's nothing wrong with doing that, but and in the scheme of things, but the problem is they kind of had their eye off the ball on the main business and they allowed problems to seep in. And by the way, McDonald's, as soon as McDonald's started serving fresh sandwiches, what do? They killed a bunch of people and kill people. They poisoned a bunch of people with food poisoning. So the problems Chipotle has, and people are starting to realize that's the problem with fresh food. It's nothing that Chipotle is evil or wrong about or nothing terrible about their business. When you serve people fresh food, there are going to be cases of salmonella and stuff like that. You can't avoid it. The thing is, though, unfortunately, you know, when your local restaurant gives you food poisoning, you hear it from a friend of yours who went there last week that they went there and they got so sick they'll never go back. But meanwhile, you went there plenty of times, you know, like Luigi's across the street, right? Okay, so let's say you go to Luigi's and you tell your friend, "I'm going to Luigi's," and your friend's like, "Oh, I went to Luigi's 2 weeks ago. I had this and that, and I got so sick. I'll never go back to that place." That's food poisoning. But the difference between, oh, I'm sorry, and then even though you hear your friend had food poisoning psychologically, you've been to Luigi's dozens of times and did not get food poisoning. You may have even had the muscles that he had and didn't get food poisoning. So you say, you were just unlucky. But when it's Chipotle and the salmonella is in the lettuce, it's not just your friend happened to be unlucky on Thursday. It's 1,000 people ate the same food. They ate basically all the burritos, used lettuce on Thursday. 1,000 people were exposed, hundreds of people get sick, and it seems like there's some kind of out of control problem there. But that problem is no different than Luigi giving one guy a bad salad on Thursday, or two guys or three guys, because you don't know them, so you never find out, and they don't talk to each other. When it's hundreds and hundreds of people in the same town, everybody starts figuring out what's going on, and it becomes a big item. So there's nothing different, though, about what happens at Chipotle or what happens anywhere when they serve fresh food. Fresh food gets parasites sometimes. It's almost impossible to control. Now Chipotle's trying to do better and better, and obviously that's one of the things you're paying them to do, is to be a little bit better at quality control than Luigi is. But the reality is you can't totally control for that kind of stuff. But that's why when a company like Chipotle goes on sale, which is what we did, we jumped into it when they had the big sell-off, because we said, well, this is silly. This doesn't impact their business negatively. This is their business. This is normal. It just doesn't seem like it's normal, because you have these clusters where people don't understand that if a batch of lettuce is bad at Luigi's, he's only going to serve it to, how many people go to Luigi's in a night? 30, 40, 50 people. How many people of those have the salad? Maybe 10, 20 people. How many of those people get sick? Maybe half of them. Maybe 10 people get sick. So in your whole town, 10 people get sick. Somebody calls Luigi, says, I got sick last night. Luigi throws out the lettuce and it's over. In Chipotle, in one day, 1,000 people eat the lettuce. That's the problem. And not only that, though, but the same lettuce, if it was bad at the manufacturer, that same lettuce could go out to like 20 restaurants. That's where you run into trouble. That's why it seems so blown out of proportion. It's just an inherent thing in the business. Now, McDonald's has had, they started doing fresh salads, and now they got screwed with that. Wendy's pulled their salad bar. They had problems once. They used to have a fresh salad bar. They pulled it because they had problems. It's not possible to do it without having problems. It really isn't. So all these things have inherent flaws in the system, and there's limits on all of them and limits on the growth. And unfortunately, the people want fresh. People are looking for more fresh stuff. But people forget that there's a reason that McDonald's, the thing that used to be good about McDonald's in the 60s was that you knew if you went to McDonald's, the food was going to be the same, boring as that is, but it would be the same, and you wouldn't get sick, and it wouldn't taste terrible. It would just taste the same, blah that tastes everywhere else. But that's better than randomly going to some hole-in-the-wall diner, because that's what life used to be like in the 60s. There weren't a lot of restaurants, and you were really taking your chances anywhere you went. So the advantage McDonald's had was you weren't taking a chance. You knew the food was going to be quality controlled. You knew it was inspected. You knew it was fresh. You knew it was safe to give to your kids, even if you were like on the road in a foreign town or something like that. You didn't have to go around asking what's a good restaurant and where to go. And even if you asked them whatever, you still might end up in a bad place. And you also knew the prices were consistent, so on and so forth. Those are the advantages of fast food. Now, people forget all that because we're so used to it now. And now they're like, oh, no, I want my fast food places to give me fresh food. It's kind of not the point of what they're there for. So there's a lot of push and pull. But you look to that kind of stuff, you can take advantage of it when it causes price fluctuations. But on the whole, the bigger issue here with Chipotle is they just price ridiculously. It was a fad. It's a fad that's run its course. Now it's become a more ordinary fast food place. Eventually, it's going to drift back more towards like $300 in the long run. But I'm happy to take advantage of that, because every time, as long as I have a $95,000 long position that I can sell $70,000 worth of quarterly calls against, I don't give a shit what it does. I'm making $70,000 per $90,000 every single quarter. That's like 80% of my money back quarterly. That's what that position's for. So, David, going back to you, you're saying now sell the 460s? I mean, you can, but it's not as safe as it was, because when we sold it, we got a lot more money for the 460s. If it pops again, yeah, then it's a good trade again. But right now, it's not a good trade. It's so much lower than where we sold it. We sold it at 470. It was 470 last week when we sold the 460s. It was where we thought it was topping out. You're selling in the middle of the channel. It could go either way. It could burn you very, very badly, especially because now the 460s only pay so now the 460s only pay, wow, there's a lot of options. They only pay 22 bucks. And then you got to look at Chipotle. Oh, by the way, and also the reason you absolutely don't want to sell the 2020s is because while I forget what the number was, but oh, actually, wait. No, I don't know, whatever. We sold the 460s for I forget how much money, but it was 70,000, so about 35 bucks. We sold them for 35 bucks. Okay. So our bet was it wouldn't move more than $35 over 460 and a quarter. It wouldn't be 495 at the end of the quarter. That was basically our bet. If it went up to 495, then our longs were going to be $35 in the money, and it really didn't matter that we would have to give this guy his money back. Our longs would be doing great. If it moved up 70 bucks, our longs would still be doing great, but we'd have to deal with a short caller, but I really don't think it's going back to all-time highs. That was the trade. Here, you're starting this huge disadvantage to that. And also, and the reason you really don't want to go out to 2020 is because how much this thing moves in a quarter. This is a quarter, July to August. It goes up from 430 to 530, up 100, down 100. So in any month and a half, it can move $100 very easily. Look at this. Here it gaps up 100. So if you're getting paid $20 and this thing moves 100 against you to 530, these are 70 bucks, and you're down 50 bucks. Then you're screwed, right? You didn't get paid. You're not getting paid enough for the risk. Now, that's for a quarter. If you're going to give it a year, this thing can burn you in a year epically. It can move $200, $300 against you in a year. The longer you give it, the more time it can screw you. And also, you're not going to be collecting the money, and the time premium isn't working in your favor. You know, so yeah, you get more money if you go to the January, the 2020 460s are 60 bucks, but that still is nowhere near enough to compensate you for the amount of risk you're taking on. So it's just not, you know, at the moment, it's not a good risk. You're still paying the same for the longs that we paid because they don't change much. They have a low net delta. And what I mean by low net delta, we have the 460, I think they're the 465.80 spread. So the delta, see 60 and 580 is 40. So the net delta here from 60 to 40 is 20 cents. So our spread, the net of our spread will only change 20 cents for each dollar. A $5 move changes our value by $1. That's very stable. $20 move changes the value of our spread by $4. So the spread that we take, that costs 45 bucks, is only going to go up and down 10% if Chipotle goes up and down 10. Is only going to go up if Chipotle goes up and down 5%, which is $20. We're only going to go up and down 10%. So that's the advantage we have in the trade. But you have to be in position when you start the trade. If you're not in position when you start the trade, you're at a very dangerous disadvantage. And you don't want to do that. It's certainly not the way you went into trades. Burn asks, any view on Apple, on how Apple will act towards the end of the year? Looks like it's popping. You mentioned possibly forming an M. Well, apparently not, though, right? Apple is taking off. I imagine that I imagine to some extent it's about the new iPhone numbers, and people are thinking they're doing incredibly. So there must be some booming numbers. I know the watches are doing incredible. They're getting great reviews. Everybody loves them. People are starting to realize that the watches are huge. So I said it may be forming an M when it was doing this. It ain't doing that. It broke up. In fact, if anything, it's looking like it's going to break up to a bullish upside. Apple's still a great value. It's a great value stock. It's certainly not one I bet against. You know, we have some short calls, but that's only just in case it goes down. On the whole, though, we're generally bullish, and if our short calls break, we're very happy to double down. We only have a small, position on Apple right now. Where are we? We only have 20 of the 165, 195 bull call spreads. These expired. We moved it around somehow. I forget what we did. But these calls were in the money when they expired. We rolled into something else. But we have a lot more, 20 longs, only 5 shorts. And I think we repositioned this whole spread to be more aggressive. But, you know, we love having huge Apple spreads. This is just a spread we've had since May. And already it's way, way deep in the money. I don't think Apple's done going up. Apple, don't forget, aside from making $55 billion, so $55 billion times 20 is $1.1 trillion. So they're only 20 times their earnings, Apple. They make $55 billion a year. So $1 trillion is not outrageous when you're making that kind of money, but also they've got $250 million in the bank. So take 20 and knock a quarter of 20 off, which is 5. So their PE is really around 15. And I'm pretty sure they're going to make $60 billion next year. So, you know, so it starts to be like really low. You have to count the money they got in the bank. They have no debt, and they've got all this money sitting in the bank doing nothing. When you buy the company, so if I buy Apple for 1.1 trillion, I immediately get 250 billion in my bank. So I'm not really buying it for 1.1 trillion. This is the whole logic corporate raters use when companies are cash rich. They say, well, I'm paying 1.1 trillion, but I get 2.5 250 billion back. So I'm really paying $850 billion for Apple. And $850 billion for a company that is making $60 billion a year is only 14 times earnings. So Apple is and especially in the grand scheme of things with the S&P 500, it's ridiculously cheap. It's half the price of the rest of the S&P. The rest of the S&P is trading in the high 20s. So it's still an incredible bargain. It seems insane to say that a $1.1 trillion company is a bargain, but it's still a bargain. It's still the best bang for the buck of almost any stock out there. So what do we do towards the end of the year? It can easily go higher. It could go higher, it could go lower. If the NASDAQ collapses, Apple's going to go down with the NASDAQ, and we're going to jump all over buying it. But it's just so strong. It's such a strong stock that you really can't bet against it. All right, so we talked about all those other trades, blah, blah, blah. What else is going on? Let's see if anything's happening in the news. Oh, how's my trade doing? What do I have left? I forgot what my trade's on now. Still have oil, right? Yeah, I got 2 left, that's right. And I got 4 of these. Oh, yay, look at that. Ha-ha. Now remember, I have 4. I only wanted to have 2, but I only added so I can get back to 2. So as soon as it stops going down, I'm gonna flatten out. Not flatten out, I'm gonna go with the 2 I originally wanted to have. So I'm gonna watch this very carefully now to see when it stops going down. I'm watching the Dow also. The Dow's probably gonna bounce to 29. At 26.9, and if the Dow bounces, and the S&P will go up no matter where it is. It doesn't matter where it is, but the Dow seems. You know, so somebody looks at the Dow and goes, "Oh, the Dow's recovering," and then they think, "Oh, well, maybe I should bet on the S&P." So, all right, I'll take this. This is reasonable. All right, so now I only have 2 short, and I'm up, and my average is 29.41. So even if I stop at 29, even if I stop here, I'm still going to lock in a profit now. That's why you raise the basis. I only raise the basis so I can get back to the 2 I originally wanted to be short at a better strike. So now I'm much more comfortable. So now my stop is still a profit. And that'll be true for oil. If oil gets below this line, this becomes my stop, and I lock in a profit. Although, you know, frankly, like I said, I should have stopped that ages ago, but that's too bad. All right, so it's coming down nicely now. So we're up 600 bucks since we started. That's pretty good. Now, again, the Dow failed their line. That's a good sign for this to keep going lower, and we're going to hit some nice numbers here. So not bad for a webinar day, right? Making some good money for you guys. So now this line becomes my stop, 35 up. Because why should I not lock it in? So now we'll get out. Whoop. Hit the wrong button. All right, so that's done. 1,000 bucks since we were talking about it. And now, see, when you're out, now what you want to do, we're going to put the Russell back on here. We'll warrant that oil. See how oil does tomorrow. So now, who's the laggard? Who hasn't pulled back much yet? Well, the Russell, but the Russell we already know was the lowest in the first place. Remember 1678 was going to be the bounce line? That's where we are. We didn't really do much about the bounce line. And 86 was the next line. Never got anywhere near that. So who is lagging to the downside? Well, now we can go by these, who's going to race down? So once you're out, you say, well, who's lagging to the downside? Well, the Russell still has a long way to go to get back to where it was. And the Russell is above its red line. Nobody else is above their red line. So I guess if I was going to short, I'd short the Russell. We'll do 2 short there. All right, and 70, and I'm going to stop tight here. I don't want to go above here. But as long as if he breaks down below his purple line, that's going to be a great sign. So if he busts below, and especially if he fails that floor over there, this is going to turn into a nice trade. So I got out of this one and I transferred over here. So what is that? That's what we call a fresh horse. In other words, this one hasn't fallen much yet. So we go to the one that hasn't fallen much yet and play that one if they're going to keep going down. So now 69, if he hits 70, I should get out. Oh, and he did. So I should get out of this. It didn't work. Oh man, it popped. Oh well. 72. I'm watching to see where these guys go. Did he just bounce off this line quickly, or is it over? It's over, I think. Oh well. Okay. All right, so lost 65 there. But the point is, I took my money here sensibly, and then I looked for something else to play that hadn't fallen so far yet. But as it turns out, I was right here. The run was the falling was over. And then so I gave back a little bit of the money that I won, but that's okay. And again, this is absent of news. I'm not actually paying attention to the news. So it's like, I don't know why it went down, I don't know why it went up, whatever. But we don't know why it went up and we don't know why it went down. It's an idiotic market. It really is. So now we'll see how high it bounces. There's no logic to this. There's no zones. There's no range. There's nothing showing here that would say why this is happening. So now we check the news and see what's happening here. Well, here you go. Who is this about bonds? Buyers are piling to ultra short bond ETFs. So there's a nice list of ones you could play. Xilinx. Amarin, Transat, TQT. Oh, what boring news. Verizon, who cares? Reeds, who cares? Energy Materials, MoviePass. Oh, MoviePass parent has raised new funds. What? What kind of funding? Wow. No shit, HM, who the hell gave them money? And under what conditions? 46%. That's funny. We have a lot of, I have 80,000 of those in my kids' account. Nothing. Although it's down a lot. I have 80,000 of these at like 12 cents, I think my average is. So unfortunately, it's not doing well. But who knows? It could pump back. This is what happened with Siri. When Siri went down to like a penny, or 2 pennies. It was down to like 2 cents or 1 cent. We kept buying it and buying it and buying it and buying it, and it finally turned around. And when it turned around, we made a freaking fortune. It went up over $1, and we were like, "Oh my God, it's so crazy." And it was the same thing though. Everybody bet they were going to go bankrupt, and everybody said they were diluting like crap to raise money and whatever. But look, the earnings per share, they're losing $1,000 per share. That's a lot of losses. If you buy a share for 2 cents, you get to lose $1,000 on your 2 cents. So you gotta have a lot of faith in these guys, but it's a fun stock. I like it. We have it here too. We have it in long-term portfolio, I think. How many we got here? Oh, I thought we had it. Huh. We do. Oh, there you go. 80,000. We have 80,000 here too. At 12 cents. They have the same position my kids have. So we'll see what happens. Down $8,000. Oh, how are these guys doing? Oh, see, they're coming back down again. Still nothing definitive, but like I said, it's just, you got to see if it's weekly bouncing or what's going on. But he's down at his pink line, the NASDAQ. The Dow is way over the pink line. So possibly, if the Dow breaks here, which is a little arbitrary, but let's say if the Dow breaks 850, that might be a good line to play. David says, still waiting for the Apple pullback that never came. And he's being patient. Yeah, I mean, it's all you can do with Apple. We waited like a year and a half once to get back into Apple after we got out of it. But we actually did. We finally, after a year and a half, it finally pulled back and we jumped back in. That was a couple of years ago. It was crazy. And 3 says TLT dropped big time a few minutes ago. Yeah, I can't. I mean, I don't understand anybody who would be buying a bond. It makes no sense to me at all. It's like the Fed's telling you we're going to make those bonds less valuable. Now we're having some nice dropping. So maybe I get back into this. I don't know where I got out, but I think he's going to cross below his red line. So let's give him another shot. See how he's seriously coming down now? Probably the Dow's going to have a nice dip too. So we'll take, oh, see, I said below 50. So we're below 50. I don't have too many things outstanding in case it goes back on us. Ah, you bastard. As soon as I get in. But we'll see, because this looks ugly. This is the S&P, which matters the most, and that's looking very ugly. And it does not look like it's really. I think they're all pausing only because you're getting a bounce on the Nasdaq, but the Nasdaq's bouncing off a support line. That doesn't mean much, only if it has a real bounce. But it doesn't prove anything. So I got 1 Dow short. I should have 2 Dow shorts, 62. I want to have 2 Dow shorts. He's 71 over there. 64, 65, 64. All right, hit it. All right, now my average is 57 on 2 short. And here I have 2 short at 76, right where it is. And because he's hitting a line, what I'm thinking is that this isn't real support. It's just a technical bounce off these lines on 2 of the indexes, which is causing the programs that are trading to say, oh, look, these 2 indexes are bouncing, therefore we should stop selling on the Dow and on the S&P. Even though they're in the middle of a channel that really has no actual meaning, you still see the other indexes reverse. You say, oh, what's going on? Why are these indexes reversing? They're reversing because they hit their technical support, which is not lined up. But if they fail their technical support, then these guys have no reason at all to keep being where they are. You know, to hang in midair basically with no proper support. So that's my theory at the moment, is that everything's pulling back. And that's based on the fact that I've been watching this shit all day long. There's no reason for us to have gone up this much. It's ridiculous. This whole rally, this is all ridiculous. All of this is ridiculous. All of this is ridiculous. It should all be reversed. And that's a nice drop. That's 685 to 600 is a couple hundred points on the Dow. That's $1,000 a contract if we actually get a fall like that. So my risk is not that high. My risk is you know, lose 100, lose 200 bucks. The reward could be $1,000 bucks. It's a good risk reward ratio. Those are the kind of trades you want to be in. So now the question, see now look, so we made all our money back on the Russell from before. So I'm going to go back to one contract short there. Oh, nope, didn't take it. Oh, and now he's profitable. So let's go back to one contract. You see, all I did was I raised my basis to be safer, and as soon as I get back to a smaller contract amount, and then I don't have to worry about it as much. Not happy about that. Come on, die. Come on, I need the NASDAQ to die. Somebody sell Apple. Somebody sell all your Apple quickly. Take any price. That'll help a lot. Okay. Profit for the day, 25. Ooh, who filled? Oh, now I'm back to one. Okay. Yeah, I'm gonna get out of this one, I think. I'm gonna leave the Dow. The Dow's the one I have my faith in. Oh, here you go. Nice. All right, up 20 bucks. Happy. See how easy that was to turn around? Not easy, but you know. So now the Dow is the one I got the faith in. So we're already up 65 bucks on the Dow. And if the, like I said, this one contract can make $1,000 bucks, but now if it goes the other way, what do I care? I wait till tomorrow and play it again. So what am I going to lose? I have to in my head know what I'm going to lose. I'm in at 26.80, 65, whatever. So I'm in at 65. So let's say I'm in at 50. I don't care. I'm in at 50, and it goes up to 950. That's 100 points at $5 a point. So 500. I'll be down $500 if it goes up to here. I will certainly add another one there, and that'll bring me up to 26.9 average. Then if it goes to 27, I would add another 2. So I know I'm going to be down possibly a couple of $1,000 bucks, but I have 4 short Dows at 27,000, which makes me pretty happy. I think I like that idea. So I'll be building into a short Dow position if it keeps going up, but at the moment I'm okay. The only loss I have, I just made 1,000 on ES. The only loss I've gotten, I took away my loss on the Russell that we just played with. We have a nice gain on oil, which I don't know what that's doing now, but we have a nice gain on oil. Yeah, still up a couple of $1,000 on oil, and I expect oil to go much lower than this. So I'm happy to have 2 contracts short here. I want to see what happens. There's no pressure now. And that's how you work into these things. Just slowly but surely, you got to grind out your profits, make sure you're in a good position, and make sure you have a manageable amount of contracts, so it doesn't like you don't wake up in the middle of the night and find out you're down $30,000 or something like that. That's very upsetting. Losing a car while you sleep, very upsetting. I've done it. It's bad. You don't want to do that. Even doesn't matter if you can afford it. It still sucks. It's never a fun thing. So anyways, there's not much going on otherwise. If anybody has any questions, ask them quickly because we're going to wrap it up shortly. And I think we're in pretty good shape though. I mean, everything seems fine. The market is super strong. I do expect a pullback. I really don't understand why we're so strong. It doesn't make any sense. When you analyze all the different things that are happening, there's not enough here to support a record high market. But that's what happens in bubbles. I mean, you can't help it. You just wait until it blows over. Like I was saying this morning, you know, the PE, what they call the CAPE, which is it's a better version of the PE multiples. In 1929, this was our PE. In 2000, now you have to understand though, in 2000, this is distorted because that includes these .com stocks. You know, here you've got real companies, right? Real companies. These are not real companies. a lot of these companies are pets.com, things like that, that had PEs of thousands. They made no money, like Chipotle or Tesla. They make no money, but their value is insane. But there were lots of them. There weren't just a few. There were so many, they distorted the value of the entire market. And even companies like Intel were getting valued 50, 60 times earnings, bullshit like that. Like perfectly good companies were getting ridiculous multiples. Why? Because this random chip maker that started business 2 weeks ago was getting a PE of 1,000. Why would Intel have a PE of 20? That's the same logic that has McDonald's now with a super high PE. Why does McDonald's have a PE of 30? It doesn't make any sense. Well, and people say, well, because Chipotle's 50. Chipotle's 50, McDonald's should be 30, right? That's not the way it works. It's like housing logic, It's like housing's like that. If your neighbor sells his house for 1.5 million, you say, well, my house has got to be worth at least 1.3 million. Because he's your freaking neighbor for you. Why should your house not be worth what your neighbor's house is worth? That's how these things work. That's the logic people use. But it's not real. It doesn't mean everybody, and then if you think about it, then you think, well, how about applying that to your whole neighborhood? Where is all this money going to come from? So what's happening in New York right now? The apartments, the home prices are dropping really fast. Why? Because everybody priced them up to ridiculous prices. People stopped buying them, and now they can't find any buyers. They put the prices higher than people can actually afford. They ran out of suckers. And that's what happens to markets like this. You run out of suckers. So again, people are looking at this saying that we can get much higher, but that's not really true because this was an aberration. It was a very large anomaly that is not being repeated. Here we are in the 2007, never got this high, and the banks were like .coms, and the real estate companies were like .coms being valued at ridiculous prices. The builders were like .coms, but not like the .coms were. The .coms were at such lengths that it became completely insane, the market, completely insane. This was only a little bit insane, and we're higher than that. We're into actually insane, and we're working on completely insane. But we're not completely insane yet. We're just insane. We're just as insane as they were in 1929. We're more insane than they were in 2007. We're more insane than they were in 2006. We're more insane than they were when we had the S&L crisis. That's where we are right now. Keep that in mind when you think about buying things. These prices are not rational. When you have money, real money, when you have a lot of money, you get a return on your investment. So I've got $1 billion to give away, to invest, and I can open a restaurant. I could buy a store. I could buy gold. I could buy stock. I could do bonds. I could loan money. I could buy an entire bank. I can do a lot of things with my money when I have a lot of it. I look at the entire swath of things to say, where am I going to get the best, safest return on my money? And when you look at a market that's super hot and is going crazy like this, and it turns out that I can, which is what we're doing, like PSW Investments just bought a pot company. Why do we buy a pot company and not put money into a marijuana stock? Because the marijuana stocks are trading at 1,000 times earnings. But they're not enough to warp the market. But the marijuana stocks are trading at 1,000 times earnings, but the company we're buying is trading at 10 times earnings. So we said you can't, on a public market, by the time somebody's going public with a pot company, you can't get a good price. But we got a great price by giving somebody $1 million cash for his stock because he's not ready to go public yet. But when we take him public, we'll get the 1,000 times return on our money. And that's not much because we put $1 million in, we go public at $1 billion, we get $1,000 back, 1,000 times back on our million, or 25% of it anyway. That's the way it works. But you have to go, so in other words, we have money, we could have put it into a stock, but there's a way better return by putting it into an actual company. And that's what starts happening at these prices. That's why when the market goes like this, you start seeing a pick up in M&A, because it's cheaper and a better place for them people to put their money to buy an undervalued company that they see that they can still get their hands on. And those M&As tend to be a mistake when you get the market this high, because somebody like Chipotle looks at somebody like McDonald's and says, oh, they're pretty cheap, let's buy them. You know, but they're not really cheap, they're only cheaper than Chipotle is. You know, it doesn't make them cheap, it just means they're cheaper, but it doesn't make them actually cheap. The question is, with McDonald's, can I open up a hamburger stand and make as much money as a McDonald's franchise? Or can I make as much money as buying McDonald's stock? And then whichever one the answer is where my money's going to go. Now, if you're a regular investor and you've got a couple of $100,000, not a couple of $100 million, you don't get to make those decisions. Because if you decide to take your $200,000 and open up a McDonald's franchise, you're putting 100% of your eggs in that basket. Not only that, but now you have to run a franchise, which takes up time you probably don't have, and so on and so forth. If I've got $200 million, I call up one of my nephews and I say, hey, you want a McDonald's franchise? Good, go run this for me. And I give him, and I put up $500,000 to buy the franchise, and I give my nephew a job, and I go like this, and my sister kisses my ass and says thank you, and that's that. Choices about what you do with money. And that's what it comes down to. And when the market gets irrationally high, they'll spike up like this, and there are people who have real money, who make the big decisions that matter, and they start saying, yeah, no, this is not for me. And they move their money elsewhere, and then the new money doesn't come in to sustain the stocks anymore. And when these guys go to sell their stock, they find out there's no actual buyers, and the thing plummets like crazy. So be very, very careful, because that's what we're getting into now. At this point, we are in a bubble. And in fact, look what's going on. Things are, you know, look at this drop. See, oh, we did hit the pink line on the S&P. Should have kept those. But that's what I mean. You give up these gains like in a snap, because the gains are bullshit and they're not really backed up by anything. All right, so let's leave it at that. My warning for the week. Anybody else have any comment here? Let's see. Nope, that's it. Okay, great. Thanks everybody for coming. We'll do it again next week. All right, take care.